Joining us right now is Rich Greenfield, Lightshed Partners. You've probably now had some opportunity to go through the document that Warner Brothers put out. You've seen what Netflix had to say about it. Which, in your mind, is the better deal, Rich? Putting aside whether we get to a bidding war, which I'm sure we will, but or we may at least, right now.
I mean, I don't even think it's close, Andrew. I mean, think about the things that you learned in this document. I mean, just right off the bat, there was somebody bidding for Discovery Global. Like the cable network piece, like so much of this discussion is like, oh, is it worth $1? Is it worth $3? How will it trade versus Versant? Somebody actually made a bid for the cable network person. I don't know who that is. Like, it's not obviously disclosed. It's company C in the document, but somebody was bidding for the cable network piece. To me, that changes everything. Like, think about how much value this split could unlock. I think that was one of the things that really came clear in the document, and you heard it earlier in the Sam conversation with David, is that if you go with the Paramount bid, you get stuck owning. You can't spin off the cable networks. The cable network business for both Paramount and Warner is getting worse. And God forbid you don't get approval. Not only are there costs associated with not splitting at this point, but you would get stuck with this asset in 2027. And who knows if you could even spin it off or what that does to you. And so I think the certainty of getting the spin done in the first half or, you know, sort of over the summer of 2026 is a very important part of this deal. And knowing that there's a bidder that wants to buy it means that the value, this $1 versus $3, maybe it's more than both of those because there's actually a buyer for these assets that no one's even aware of until they saw this document. I think that's a very big deal. And then on top of that, the fact that on December 1st, like that seminal week when all of this is going down, the offer that comes in from Paramount is this, I mean, this pun is intended, but it really felt like a house of cards when you looked at like how all of these different, you know, investors, if one pulled out, the whole deal could fall apart. The portion that the Ellison family was putting in wasn't even clear the Ellisons were putting it in. It could be syndicated out to any number of other parties. And so it wasn't even clear that there was any money behind all of this in terms of like who was actually funding it. We've been asking this question now for months. Is Larry Ellison writing a $75 billion check? And I think, Andrew, the clear answer is no. Most of this was being financed through debt, levering it to 7 times. And even worse, the actual amount of capital that was being put in on the equity side, most of it was coming from the Middle East, because I don't think most investors want to invest in a cable network company levered at 7 times.
Okay, so let me then ask this question. Do you imagine this turns into a bidding war, which means, do you think that Paramount is going to come back with an upgraded offer? And I don't know if an upgraded offer means more money itself. Maybe they have to, given what you're saying about this, you know, the spin and how much value that might have. If they come back and say, you know what, forget about all of these different trusts and other things. It's just a flat offer. Here's what it is. No strings attached. Does that do the job?
Look, if Larry Ellison's willing to sell down his Oracle position, put it in escrow, you know, $40+ billion in escrow, then I think this might be a different story. Now, look, there's still a bunch of like the operating covenants, you know, while this transaction is occurring. They weren't allowed to change salaries of any employees. They couldn't make a licensing deal over $10 million. Like, there was a lot of very restrictive covenants on this transaction. It's actually funny, Andrew. These are things that I think actually were problematic when Skydance was buying Paramount that inhibited Paramount from running their business. Warner Brothers basically said, no freaking way. Like, there's no way we're going to allow this. And the Paramount team didn't seem to listen to those comments from the board. Very different when you read the back and forth between Netflix and the board and Paramount and the board. It seems like night and day. And so my point of that story is I don't think it's simply about going from 30 to 32 and having more certainty on the cash component. I think it's also the entire structure of the deal. It was more problematic. And so I don't think it's that simple. Now, look, Paramount comes back with $40 a share, all cash, Larry Ellison's signature. He's selling his Oracle stock to buy WBD. Great. But the reality is the fact that they've had this many opportunities and most of the cash is coming from the Middle East. And even the Ellison piece could be syndicated out to others God knows who.